The Ghana Stock Exchange in 2019 witnessed a disappointing performance throughout the year. The composite index, which measures the performance of stocks of listed companies, made an annual return of negative 12.25% for the full year. This means that even though some listed stocks made positive returns last year, on the average, all the stocks put together made an annual return of negative 12.25% in 2019. According to Gideon Amweniche, an equity research analyst with Databank Financial Services, the sluggish market performance in 2019 was due to, among other things, weak investor sentiments fueled by the financial sector reforms. For the first 7 weeks of 2020, the local bourse has seen a further drop by making a return of negative 1.78%. While acknowledging the difficulty in the market, the general manager of UMB Stockbrokers, Ben Ackah, called on investors to be optimistic about the market this year and avoid following the bandwagon.
I think that investors in general should understand their risk-return profile so that they will better take advantage of the wide range of instruments that are available. It's not everybody that is looking to do long-term investments, and it's not everybody that wants to do short-term investments. There will be some who will do a little bit of the short, a little bit of medium, a little bit of long. Just understand your risk profile and then adequately account for those things. But don't join the bandwagon. Don't invest in a particular thing because others are saying that it is doing well. I think you need to speak to a broker. You need to understand the dynamics of the instruments that you want to invest in, get a proper advice, and I think you'll be fine. Especially if you are doing long-term investments. I have been in this market. I've seen the market do more than 100% in a particular year. I've seen the market do 80% in a particular year. But I've also seen that the market has done some negatives. But if you look at the percentages in terms of the positive returns as against the negative, I mean, the market has done well. The market has done well. If you have been with the market since the beginning of the market 20 or so years ago, you will be in a significant positive balance right now, in spite of all the negatives that have happened.
Ackah further expressed confidence in the bourse yielding positive returns in 2020, even though it's an election year.
My understanding, especially where 2020 is an election year, what I've come to see per research that we have done is that usually in an election year, the market actually does well. Market does well for the most part of it. Since 2000, the general election, where the market saw a positive return, there has been a consistent positive return up until the only time there was a negative return was actually 2016 general election, which was just the most recent one of it. So if we are going to base our research on the long term that we have been monitoring, we think that 2020, the year, will do well in terms of the market. And not just that, also because we expect that there will be some funds that will come into the system. When I put it like that, what I'm trying to say is that we've heard that the president talk about this year being the year of roads. They talk about the president talking about doing a lot of things on the market. This will translate into money into the system, we hope. We hope that some of them would cascade down and be invested into instruments across board, including the stock market. And so when that happens, there will be some funds that will be chasing instruments. More demand equals prices moving in the positive direction.